right. Good day, everyone. How are you doing? It's been a while. I'll keep doing these videos little by little. Today we are going to discuss is wave four always 50% of wave three, or must wave four always be 50% of wave three? So remember this our Zichis Agro Allied Industrial PLC. We did a Elliott wave analysis on it, also showing you how to draw an Elliott wave and the different criterias for drawing Elliott wave. Okay, so I did that in a video on this channel. You can check the YouTube channel for the video. So I can remember when I did a video, this is the analysis I actually did. So I was expecting that. Let me remove this triangle so I can show you what I'm saying. So you can see where this 4 is. I was expecting that the markets to stop here because of that triangle and then, you know, go on an upward rally because the market has already come down to 50% and I don't expect it to go down again, just like how it happened here. But however, it didn't happen like that. The market came around there and still pulled back again. Okay, so you can see when I drew the triangle and all that. So it didn't happen like that. So this actually offers opportunity for reanalysis. Okay, for um reanalysis of this stock and re-entry also. So I'm going to bring my 4 to this place and the 5 will still stay up here because it's meant to go on an uptrend and also surpass this number 3. Okay, so the question is, must wave 4 be 50% of wave 3? The answer to that question is it depends, because on different timelines the waves on the Elliott wave have their own movements. So for example, now you can see that this is a very strong correction. This wave 4 here is a very strong correction, and it's corrected, and then it corrected to 0.618 of the Fibonacci retracement, and after that it went on this um recovering market. I'll call it a recovering market instead of just a bull run, because it hasn't crossed its all-time high yet. So it's started this move, this momentum and sentiment, showing that the market is recovering. Okay, so out of curiosity I had to check other time frames to see why is it that on this time frame we are seeing that wave 4 is more than 50% of wave 3, and then which also acted as support that took this market up. So let's go to the let's go to the let's go to the weekly first. So on the weekly chart, as you can see on the weekly chart, let me remove this. On the weekly chart, you can see that where this my Fibonacci retracement to stopped is a bit high, and this also is a long, strong, weak candle that actually helps investors and analysts understand what the buyers and sellers were doing in the market. Okay, so I will bring this down to the close of the past candle before it the close before it went on a bearish run. So the last close was here, and as you can see, let me zoom this out a bit. You can see that after this one, two, three, you can see that this will fall now. We trace to 50% of the Fibonacci and then bounce back up for a bearish, sorry, for a bullish run. So from this, I would say that actually what happened on the daily chart was that investors on the weekly charts were taking profits. Investors on the weekly charts were taking profits, and when it got to 50% off wave three, it went on a strong bullish sentiment. So that is how you know that okay, when the correction, the more the correction, the the higher the time frame whereby investors, either institutional investors, are taking profits. So let's look at this uh monthly chart. You can see on the monthly chart, the market hasn't gone anywhere yet. So from here, this is just wave one now. From here, okay. So this is from here to here. As you guys can see, when the market came down to 0.32382, it's rebounded and now it's going on an upward rally. For me, I suspect that this market will still come down before it goes on a final upward rally. Given this analysis, it means that the market still has potentials. Okay, that is number one. And number two, if the correction exceeds your Fibonacci expectations, then just know that profit taking is actually taking place in the higher time frames. So it's better you take your analysis to the higher time frame and look at it and see how far. Just like how I have done here, you can see that the market went up, then came down, and then when it got to this level, this is a monthly chart and rebranded. And on the weekly chart, you can see market came from, let's see, this wave three is where wave three started. So you can see market came from here to this place to the end of wave three. You can see it retraced at 0.5, that is 50% of Fibonacci, so 50% of wave three. Then on the daily chart, due to the strong uh corrective wave here, it retraced at 0.618. Okay, so that is that for that, for this. And wave 4 must not always be 50% of wave 3. And if you want to confirm how your wave 4 or your actually performing, then do your analysis on higher time frame and then bring it down to the lower time frame to know what's actually happening. Okay, so that is how we approach our technical analysis for the Elliott wave theory. So we have seen one theory that wave 4 must not always be 50% of wave 3. Now, looking at this, supposed to, let's look at the correction and see how far. From, I'll bring up the triangle now. is okay, a triangle pattern. So it starts from here, this high here, and then this low here. So as you can see, this is a flag correction, not an asymmetric triangle correction. You can see this is a flag correction, and it surpassed this our candle now, broke the flag going up. So based on this performance, I would say that this market has started its strong recovery phase, and has potential to actually surpass wave three, which was its former wave. So that is that for that. We're going to watch this and see how this works out. If this breaker continues, then this flag corrective pattern has ended, and it also is correct. So that is that for now. Subsequent future we will try to bring up more videos. Also, I want to complete the beginners course that I started here. So yeah, keep yourself glued. Stay tuned. Take care.